Welcome back to the show, Megan.
Thanks for having me, guys. Happy Friday.
Happy Friday to you. So we're talking Nvidia. We're talking big tech today. This is one of the biggest techs, biggest market cap in the market at this point right now, overtaking Apple. But when you look at the growth, the stock consolidated between late June and maybe early October, but we've seen another resurgence. Is your data still reflective that, hey, they own 90% of the GPU data center market, and that's going to continue to grow and provide this optimism here for investors?
Yeah, so this is a name, I mean, it's kind of crazy whenever you look at even like a 5-year chart on Nvidia. It's straight up and to the right, up 2,700%. It's just mind-boggling. And this is the poster child for AI, right? This technology is powering everything from generative AI to autonomous driving. And this seems to be benefiting from every tailwind, at least in our universe, that we're keying into. You know, we're very bullish on autonomous driving. We're very bullish on data center expansion, and all of these things. Nvidia is driving that growth. And so whenever we look at this name, you know, this chart I think is really reflective of kind of what is powering Nvidia right now. You can see all of these other major big tech players increasing CapEx spend, and the majority of the market share, like you just mentioned, is going to Nvidia. Additional points in our data suggest that Nvidia is only continuing to grow its dominance. When we look at web visits, which for us, you know, could signal some future growth interest, and that's probably the best metric that we can look to in terms of B2B and things like that. And we see Nvidia outpacing all other, I'll put air quotes around, peers. And so this piece of the pie, at least in our data, just continues to grow, and that CapEx spend from major tech players continues to grow. So while Nvidia is trading at enormously high levels, you can kind of see why the storyline makes sense.
With a closing price of $147.65 at the end of the most recent trading session, Nvidia showed a 0.83% swing from the previous day's closing price. This move behind the 0.38% daily rise of the S&P 500. In the meantime, the tech-heavy NASDAQ index added 0.09%, while the Dow gained 0.59%. As of today, shares of the company that produces gaming and AI graphics chips had increased 10.44% over the previous month, surpassing both the S&P 500's 4.9% gain and the computer and technology sector's 7.11% rise. The performance of Nvidia's earnings in its next release will be closely watched by the investment community. On November 20, 2024, the business is expected to make its earnings public. Nvidia is expected to disclose earnings of $0.74 per share on that day, representing an 85% year-over-year gain. In addition, our latest average estimate predicts sales of $32.81 billion, which is an 81.07% increase over the same quarter last year. Consensus estimates for the year-end period predict earnings of $2.82 per share and sales of $124.81 billion, which represents changes of plus 116.92% and plus 104.87%, respectively, over the previous year. Investors would also benefit from keeping an eye on any recent changes in analyst expectations for Nvidia. These recent changes typically reflect the shifting nature of short-term business trends. In light of this, we can interpret positive estimate revisions as an indication of hope for the company's future. According to our research, there is a direct correlation between these changes in estimates and future stock price performance. We have created the rank, a special model that takes these estimate changes into account and provides a useful grading system in order to take use of this, with equities ranked number 1 delivering an average yearly return of plus 25% since 1988. The Space Rank system, which runs from number 1, strong buy, to number 5, strong sell, has an excellent track record of outperformance that has been professionally audited. The consensus EPS estimate has increased by 0.18% in the last month. At the moment, Nvidia has a rank of number 2, buy. In terms of valuation, Nvidia is presently trading at a 52.75 forward P/E ratio, Compared to its industry's forward P/E of 19.66, this suggests a premium. We can also see that Nvidia has a P/E ratio of 1.48 at the moment. The well-known P/E ratio and this well-liked statistic are comparable. The P/E ratio, however, additionally accounts for the company's anticipated rate of earnings growth. As of yesterday's closure, the average P/E ratio for the semiconductor general industry was 3.3. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Last quarter, data center jumped over 150%. Now, we know that those growth rates aren't sustainable moving forward, Megan. And then also on your chart, you know, the big tech companies that are putting up big CapEx numbers to get ahead of the game as far as investments, and Nvidia is the winner in that realm. But eventually, we'll start to see a pullback in those type of numbers. Is this where, hey, maybe some of the big tech names will start to pull back, but then you've got a big total addressable market where other companies start getting in, where they start needing the chips? Is that going to be able to offset maybe after 2025 that, you know, as far as your data goes, that maybe we'll see a little bit of semblance or normality here as far as growth rates go?
You know, that's really tough to say, because I feel like if you were to look back at our conversations on NVIDIA at any point over the last year, it would be these levels, the stock, it's getting a little frothy. I mean, how many times have we used the word frothy to whenever we're talking about NVIDIA? And yet again, we're looking at its stock near all-time highs, and we're looking at growth rates that continue to impress and continue to surpass expectations, even though they're coming from a point of previously really high growth rates. So I think that this is a name that is in all of the right areas, and I think growth potentially is exponential, even beyond what we can imagine looking forward. So I don't know. This is just a name that for us, we're not anywhere close to betting against long term. I think if you look back over the last couple of years, anytime that you saw a pullback or you saw some type of uncertainty related to this name, the company was able to release technology that was even better and even, boost demand even higher. There's constantly going to be a demand, even from a lot of these really large tech players, to continue to update, to continue to, have the next best technology. And right now, NVIDIA is the next best technology. So we'll have to take a look and see how things shake out in a year or so. But it's tough to say from here that NVIDIA is, at the peak. I don't know.
Yep, we got 12 days till that big big earnings event. Stock up nearly 200%. Megan, would you guys be buyers here according to your data?
I think that you could justify being a buyer here. We'll have to look and see how things shake out leading up into earnings. I know that, NVIDIA has a history of running up into earnings, and so we could certainly expect to see some bullish momentum heading into that event. Wouldn't be surprised to see a bit of a pullback on earnings if growth isn't just, out of the ballpark, but we would certainly be a buyer of dips on any pullbacks.
All right.
A good base breakout usually results in a 20% to 30% gain for a leading stock. However, it is not a guarantee, particularly in times of terrible stock market conditions. A bear market or other factors may cause a stock to break out of a base but not move higher. Shares may trade sideways and establish a new base slightly above the previous base as a result. The base-on-base pattern, which is one of the few historically bullish chart patterns, is the stacking of bases. The second base indicates that the stock is continuing to purge weak holdings and preparing for a surge once new investors enter the market. When a fresh uptrend starts in the overall market, a true leader will be among the first equities to emerge. Pent-up demand will cause a stock restrained by a weak market to soar higher. A suitable base, such as a cup with a handle, a cup without a handle, a flat base, or a double bottom, is the first step in the base-on-base design. As the stock waits for the market to recover or for other clouds to clear, the second formation is typically a flat base. The second base should form mainly, if not completely, over the first base and resemble a stair step up. The second base will establish the buy point. It is believed that both bases are in the same stage. The second base is regarded as an independent base and is not a part of a base-on-base pattern if it forms more than 20% above the preceding base. Its trading history determines whether it becomes a second, third, or late-stage basis. Nvidia in 2021 is an example of a real market leader that created this bullish trend. In May 2021, Nvidia ran up for 7 weeks in a row till July 2021, with a press-split buy point of 207.33 to 1. The stock took a break and built a brief cup with handle base. On August 20th, shares surged out of the base too. Nevertheless, the stock stalled after climbing 11%. A 6-week flat basis followed that respite, 3. The majority of it met the criteria for a base-on-base formation by forming atop the previous base. On October 25-4, the stock hit the 230.43 purchase price, and the next day it jumped 6.7%. Institutions were investing heavily in the stock, as evidenced by the 4 consecutive weeks of rises in share volume. Within 4 weeks of the second base's breakout, Nvidia's stock increased by about 43%. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Today, there are 2 fundamental shifts that are happening at the same time. In 1964, the IBM System 360 introduced the world to the concept of IT. The IT industry as we know it introduced the idea of general purpose computing. For the last 30 years, we've had the benefit of Moore's Law, an incredible phenomenon. Without changing the software, the hardware can continue to improve in an architecturally compatible way. And the benefits of that software doubles every year. Moore's Law made it possible for us to continue to drive down cost, democratizing computing as we know it today. But we know now that the scaling of CPUs has reached its limit. We can't continue to ride that curve, that free ride. The free ride of Moore's Law has ended. We have to now do something different. We started our company to accelerate software. Our vision was there are applications that would benefit from acceleration if we augmented general purpose computing. We take the workload that is very compute intensive and we offload it and we accelerate it using a model we call CUDA, a programming model that we invented called CUDA that made it possible for us to accelerate applications tremendously. Real-time computer graphics was made possible because of Nvidia coming into the world and make possible this new processor we call GPUs. The GPU was really the first accelerated computing architecture running CUDA, running computer graphics, a perfect example. We democratized computer graphics as we know it. 3D graphics is now literally everywhere. And so over the last 30 years, we've been on a journey to accelerate one domain of application after another. Today, we accelerate so many important industries. Cullitho is fundamental to semiconductor manufacturing, computational lithography, simulation, computer-aided engineering, even 5G radios that we've recently announced partnerships with, that we can accelerate the 5G software stack, quantum computing, so that we can invent the future of computing with classical quantum hybrid computing, Parabricks, our gene sequencing software stack, QVS, one of the most important things every single company is working on, is going from databases to knowledge bases so that we can create AI databases. Using QVS, we can create and vectorize all of your data. These acceleration libraries now cover so many different domains that it appears that accelerated computing
Nvidia became the first business to surpass $3.6 trillion in market valuation, marking a significant milestone. Donald Trump's presidential triumph, which stoked expectations of tax cuts and fewer restrictions under his leadership, coincided with the success and a wider market rise. Today, Nvidia replaced chipmaker Intel in the 128-year-old blue chip index, the Dow Jones Industrial Average, due to its significant increase in market value. The reorganization marks a significant turning point and points to the chipmaker's future expansion. Because of its dominance in the billion-dollar AI chip market, the majority of analysts predict that Nvidia's value will increase significantly in the future. ETFs with the highest allocation to this AI chipmaker are the best options for investors looking to take advantage of the phenomenal growth. Grizzle Growth ETF DARP, VanEck Vectors Semiconductor ETF SM, AXS Esoterica Next Economy ETF WGI, Strive US Semiconductor ETF SHOC, and T-RAY-X2X Long Nvidia Daily Target ETF NVDX are a few of them. According to Reuters, Nvidia holds between 80% and 95% of the global market for AI chip design and software, making it the industry leader. Its dominance in the development of advanced graphics processing units, GPUs, which are unparalleled in the production of processors that drive artificial intelligence systems, such as generative AI. The technology underlying OpenAI's ChatGPT, which can generate text, images, and other media, is largely responsible for its success. NVIDIA's GPUs are used by major cloud service providers to execute and train AI applications. Approximately 20,000 startups and well-known companies like Microsoft, Alphabet, and Amazon are among the company's clientele. The demand for its AI GPU, Blackwell, is insane, according to CEO Jensen Huang, who also anticipates that the data center industry will increase quite significantly next year. In the fourth quarter, it anticipates the new product will generate billions of dollars in sales. The chipmaker is working with Foxconn to construct the largest Blackwell production facility in the world in Mexico as part of its efforts to increase production. Morgan Stanley analysts predict that before the year is out, Blackwell might generate an additional $10 billion in revenue. According to CEO Jensen Huang, the demand for its AI GPU, Blackwell, is insane, and he anticipates that the data center industry will rise dramatically in the upcoming year. In the fourth quarter, it anticipates the new product will generate billions of dollars in sales. The chipmaker is working with Foxconn to construct the largest Blackwell production facility in the world in Mexico as part of its efforts to increase production. Morgan Stanley analysts predict that before the year is out, Blackwell might generate an additional $10 billion in revenue. It is anticipated that NVIDIA's upcoming GPU processor would propel yet another wave of rapid expansion. The AI chipmaker introduced the Blackwell Ultra, a powerful variant of their Blackwell chip that will be available in 2025. In 2026, a new AI chip platform dubbed Rubin will be released. In 2027, the business will launch an Ultra version of Rubin, citing robust demand for AI. Several Wall Street analysts, including Goldman Sachs and Bank of America, recently increased their target price for NVIDIA. Over the past 5 quarters, NVIDIA's revenues have more than doubled. However, the third quarter is predicted to mark the end of the trend. Its rapid revenue growth is anticipated to continue, though. According to the consensus estimate, sales is expected to expand by 81.1% in the third quarter of the fiscal year and 62.5% in the fourth. Additionally, the chipmaker's earnings are increasing steadily. Growth of 85% is anticipated for the third quarter of the fiscal year and 50% for the fourth. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector. Stay ahead of the game with the latest stock market news, data, and important updates. I share valuable insights and real-time information on my Telegram channel, ensuring you're always informed before everyone else. If you want to keep up with the fast-paced world of investing, open the description below, click the link to my Telegram channel, and join our growing community. Don't miss out on crucial updates that could impact your investment decisions.